Good morning, nieces and nephews. Look like the chop continues. Yesterday, you can see on the daily chart, the SPY retesting the support of this ascending triangle. Looks like the dip buyers came and bought the dip. It was a little complicating trading it yesterday, especially around the 581 level. The market maker's been using that level to set traps, but we did eventually get like some type of W pattern. You guys can see here the W pattern here. I didn't really trust it. I didn't really trade it when we were around this area. Didn't know if it was gonna break down or dip buyer was gonna step up. But once it cleared 582 yesterday, that's when I trusted it more. I trusted the bounce. That's when I wrote here in the Discord. Had to wait all day for it. It was around 1 o'clock when I wrote it. 42.3 cleared here, put in 43.6 and 44.5 in play, and we hit 43.6 and smashed 44.5 perfectly actually before rejecting. This is why it's very important that we play it. We play it level to level, guys. Okay, because we enter here. The idea is we enter here on the breakout after bouncing or a false breakdown from a critical level. We enter here on the breakout. We want to take profits as close to the target as possible. This is what level to level is all about. And then we leave a runner because you guys see what happened after that. The market got a little complicating, didn't it? It broke down a level, recaptured a level, dead cat bounce, went down lower. This purple line here, this is a 15-minute chart, but this purple line here, it's based on the 5 daily moving average on the daily chart. I got this indicator idea from Vav. Shout out to Vav. But that is the 5 daily moving average. Once it finally broke down at the end of day, this happened right at the end of the day. We broke it down. And then what happened in pre-market this morning? It treated like resistance, and now we are gapping down. We are pushing downwards, guys. This is why it's so important to play it level to level. You get in and you get out. You get in and you get out because stuff like this could happen. All right. So what is the plan next? What is the plan next? Well, we're gapping down. I'm still watching this ascending triangle, and guess what? It is getting tighter, guys. It's getting tighter. At least we have some visual representation of what this chop is looking like, at least for the moment. And it is getting tighter, which is a sign that it's going to end very soon. And right now, the support based on the ascending triangle is at 581.5. Right now, we're at 581.85 in the pre-market. Okay, if you lose 581.5 because it is sloping up, that could be a red flag, not a bear flag, but a red flag, and it could favor the bears. Okay, below that, that would put 579.5, 578 in play. Okay, it would be bearish based on this structure if we break below 581.5. That's the critical support level that I have today. And if we are to trust any bounce, I need to see it get above the 5 daily moving average, which is around 583.2. 583.2 is the 5 daily moving average. And then 584.5, we see we had a hard rejection from that yesterday. And then 586. Above 586 is new all-time high. And the chop ends in favor of the bulls. Guys, remember the chop phase and the trend phase, okay? The price action 101. If you're a price action trader, this is knowledge you got to know. The chop phase and the trend phase, right? The concept behind that. After the chop phase is over, comes the trend phase. So it's very important we watch the break of this structure. Okay, watch the break and confirmation, of course. And that should tell us where our next leg is going to be. All right, below 581.5, bearish. If it can hold and we clear the 5 daily moving average at 583.2, if we clear 584.5 and 586, new all-time highs in play. I usually use the 15 to 30 minute chart. If it's too choppy, I move up to the 30-minute. Okay. If it's decent, 15-minute chart, no lower. Anything lower is just too trappy. Get a lot of fake outs, okay? Even the 15-minute chart, you can get fake outs. But the 5 minutes and lower, it's worse, okay? So anyways, that's the plan for SPY. Triple Q, we got a third test of this downtrend line yesterday. Right now, we're at 493.44. Okay, we closed yesterday at 495.96. Just below my 496 resistant level. Didn't clear it. And now we're gapping down like $2 currently. All right. Below 494, 492, and 490 are next support. Okay, below 492, it kind of would be a bear bias. But yeah, those are next support. They fail, guys. Look to short. Pray for volatility today because we're gonna need some volume if we're gonna get a nice move. All right. But if it is bullish, 494 and 496 must clear to put 497.5 in play. Above 497.5, a bottom is in. Chop phase over in favor of the bulls. Look to react like sheeps, guys, up or down. Just get that money. NVDA went to new all-time highs, but yesterday it decided to consolidate. You can look at it on a 15-minute chart. You can see the sideways price action. It's just sideways. Back to the daily. Once again, 142.5 is a level that I'm watching, and we are below that right now. As long as below that level, 141 is the next critical support level. Critical. If that level fails, pull back time. All right, 139, 136.8, 135, 133, and 131.5 all in play. If we get above 142.5, then another test of 144 is possible. And if we clear that level, new all-time highs to 146 or higher incoming. Guys, look to react. Add the levels to your charts like Uncle does. Use the 15, 30-minute chart. Look to react, guys. Tesla. Why I got on a 15-minute? It's battling still around that 216 level, guys. Okay? But I mean, it's been what? About 4 lower closes in a row. And yet, they still cannot give us that daily chart close below 216. Plan is still the same. For the next bearish leg down, we got to get that daily chart close. We need to see that all the buy orders at 216 are absorbed. Right now, it's still not the case. But once it is, if it is, bearish. And if this bounce is to be trusted, then today, 217.5, 219 must clear to put 220, 222, and 223.5 in play. You can still make money in the chop. If you can clear those levels, you can play the bounce. But I can't call a bottom until 223.5 clears. And it looked like we're building a big island. So watch out for any gap ups or gap downs in the future. I don't know when it's going to happen. But just know when it does, you got to be ready to react. IWM. Interesting setup here. Monday we had a big body red candle. Yesterday we had a pause in the form of a doji. Okay, we got to be careful today. Usually the third candle based on these 2 candle setups, usually, not always, but usually more often than not, it's also a volatile day. We just don't know if it's going to be to the upside or to the downside. We got to look to react and let the price action, give the price action a chance to tell us. But usually the third candle will either be a big body green candle to the upside or a bearish continuation, which is another red body. So good news, there could be volatility today and this could be tradable. Bad news, we don't know which way. Okay, but that's okay because we got the price action and the levels. All right, it's around 220.2. If 220 fails, guess what? Price action is bearish. We're going down. 218, 216.4, and 215 all in play. And if the price action is bullish, it's going to have to gap up or break above 222. And if it does, it's going to be nasty. Back to the upside, 224.5, 226, and 228 plus all in play. Look to react, guys. That's all I can say. And that's all I have for you guys this morning. Price action. I'll make a aftermarket video later today with the option flow and all that happy stuff. Okay, thank you guys. Good luck. Peace.